Hey, good morning. Still a little weird, Ken. Something going on. It'll pass. All righty. Let's get going here. You know, yesterday had the potential to do a little something to prove itself, and it didn't happen. And as crazy as it is with this price action, and I'm just looking at the Dow here, which it a lot of things look like they could either move higher. We'll look at the other markets, but the Dow, where it was potentially setting up a 1, 2, 3 to the downside, held the prior day, and actually then rallied and looked like it could move up toward the top of the big red candle there. And if it had closed there, that would have been a really bullish sign to look for prices to push higher. Well, that didn't happen, and it sold off and then actually broke down. And as crazy as this market is, you could say that this is virtually normal at this point, which is a little crazy. To add to the craziness, to see here is a topping tail continuation pattern to the downside. It does continue, but now we've got a bottoming tail. And of course, I do know that this day is far from over, but you can see it's kind of grinding its way up here, negating this reversal, this break higher, the shock. And so what we have here, it's an unusual pattern. You don't see it too often, where you have a shock followed by a shock, meaning this one wasn't so much of a shock as to the breakout here, where it went higher. But there was this void, where it could have retraced back up there. So when it attempted to do that, it got slammed back down and then went forward, to the downside. And then that just reverses itself right back to the upside. And so when I see something like that, well, I always ask why. Well, kind of hit not a whole number, but, an even kind of number there. And there's nothing to the left. But maybe another market hit some support and reversed. Sometimes that's what happened. Anyway, so we've got this resistance up here, which you can see where on the 5-minute where it's coming up to. So we'll see what the reaction is to that as we get closer to the open, whether it dives back down or it goes sideways there. So one of our factory work concepts of reading the tea leaves is, after a deep retracement and prices reach an area of resistance, which is the daily chart, what it's been doing that for a while, can it go sideways? And if it can go sideways at that resistance rather than plunge back down again, we view that as bullish price action that supports a bias that it can go higher. So whether it's a daily chart or a 5-minute chart, well, we read it in the same way. So when it gets up there, we'll just see whether it goes sideways, or if it does break out. That's not a good breakout setup, meaning it went all the way down, retraced all the way back up. That's a greater than 100% retracement concept, which tells us that, yes, it broke above the high, but don't buy there. Wait for a retracement or a consolidation for an entry point. So we'll see what happens there. But unusual patterns. We'll see where this ends here. This could be a big red bar by the end of the day, as you all know. So keep that in mind. S&P, as we know, is held up better. The Dow, had, Boeing getting beat up, and McDonald's, and I don't know what American Express did yesterday, but on its earnings, it popped up and came back in again. So, but there's been some positives too. So we've got this erratic price action going on here, sideways chop, so far consolidating at the bottom of this momentum move to the downside. So we look at this as, let's just duplicate that. And so we got our range set up there. And of course, we got to turn it to red. There we go. So we go into the day looking at the S&Ps within this trading range right here. And we never know whether it's going to break out or break down. And situation like this, we stand aside. We do nothing. Now, if you're so inclined to try and trade it from a smaller time frame, that's certainly up to you. I don't suggest it. There's probably better things to trade than getting involved in something that's within a relatively tight range with this kind of tail to the upside and tail to the downside. And that's, a picture of indecision and kind of like craziness as I see it. So let it tighten up, do whatever it's going to do. And then we'll see if it can recover to move back up into this red bar, or whether it's coming back down here. And if it does that, then we do the same thing. What happens when it gets down here? Do the buyers step up again and push it higher, or does it go sideways? And if it goes sideways, then we're going to be looking to short a breakdown. So as far as the markets go here, so far I see nothing to do but observe, and see whether it can break out of this little range that it's creating here, or whether it's just going to be kind of a dead day as far as the markets go. So trading range at the bottom of a momentum move to the downside. Notice the wide range bar there, indicating that this move was close to being done. A lot of times it does make another new low, because that is a really strong move. And then it reversed itself, and now it's kind of just grounded itself up there and has now formed a little pivot up there. This bar is still working. I mean, it's not done, got 39 minutes left to go in it, but at completion, we would mark that as a pivot high. Excuse me, 3 bars to the left and 3 bars to the right with lower highs. And that'll give us a reference point of resistance there, which you can see right over here on the 5-minute. So we'll see whether this chops around or rolls over bottom of this little range, or what it's going to do. Can it get above this 78.80, which opens up the door to, could be in intraday a relatively significant retracement that might negate the red bar, which flies in the face of logic that a big red bar like that could be negated. But in this market, it does happen. So we'll see where it ends up. We already looked at the Dow and the Russell. It actually held up pretty well, yesterday. Still within its trading range up here on the 60-minute chart. So we'll see where that goes, but do the same thing. Can it get through the top of the range, or does it go through the bottom of the range? So we've got relatively tight reference points as far as the market goes to keep track of. Oil is down here a little bit, excuse me, but no big deal. It's just chopping around with another trading range. They're all over the place. We'll take a look at that, Paul, for the Condor on the S&P. Now we've got a little breakdown failure. That's something I mentioned yesterday to keep an eye on. This was a smaller bar yesterday to see if it started to retrace into that red bar. And if it did, I said that's going to be a fly in the ointment for equities and might drag them down. And that certainly did help to do that. So now it's, right up there where it's been rejected each time. But the depth of retracement and the fact that this broke below the bottoming tail bar and now it's reversed the whole thing is supportive of thinking, hey, if this can hold this area here and it clears this line, it should start going up, right, to the next resistance point. And if it is going to go up to the next resistance point, well, then the odds are increasingly good that this is going to break down below this support. So that's the intermarket analysis concept of what can guide us. This may be hanging down at the lows and bonds start breaking out, and you're not aware that bonds are breaking out above the highs, and you might get caught over there. So it's good to keep an eye on when one market can affect the other. What would TLT equivalent be? Well, TLT would be the equivalent of these bond futures, Paul. So they are a, that's TBT, TLT. That's the inverse. So it gets gaps because it's not trading at the hours that the bonds are, but you still have a bullish pattern of a gap down and then a gap up. So you have the retracement here on the 24-hour chart, and it's the same story. If it can clear here, well, then it probably goes up there. So you should keep an eye on that. Gold's in a trading range. You know, we've been talking a while now, looking for a buy setup to set up here, where the weekly is pulling back to the minor support area in the rising 20, but it's just not ready yet. It's just chopping around, and you can see the sideways range here. So if you're an intraday trader and you're interested in gold, you know, sell the top, buy the bottom. But when it gets to the top, you know, we'll see. Look for some kind of a rejection of the top before you consider shorting it. All right. So you have concept of support and resistance. You got concepts of trading ranges and into market analysis, but ultimately it does come down to the price action. So you would want to see something like this, right? Topping tails, where it tries to push up and gets rejected and pushed back down. And the same thing at the bottom of the range, where it tries to push down and gets pushed back up again. Silver, just kind of dead in the water there, sideways. So not much to really say other than probably best to just stay away. And the transports, we always want to keep an eye on them. And they're doing great. And this is supportive of the market, but you know, the markets are jittery. And so while, you know, we got certain things that look like positives, right? The transports, we've got bonds that potentially on a day-to-day basis for the moment are negative, and those kind of pieces of information neutralize each other. And it's why we have this trading ranges within trading ranges and this uncertainty that we do. So being aware of it keeps us out of the frog in the blender, us being the frog. So we know what we're dealing with here. So trade accordingly. Looking at SPX for Paul. Here's your ranges, and what were you saying? You didn't mention any levels. But here is your trading range. Whether it'll stay there, it's relatively tight. 32.20. I would maybe start with just the call spread side, not so much the put side, and just see if this comes down. And then if we get a reversal back up, you can put on the other side of the condor, which would make more sense down at this level, especially if we got a bottoming tail bar or some W pattern. So we'll see. Notice the weekly chart over here. You know, it's really tight up against this. So we got the Fed coming next week. I guess more earnings, you know, Thursday, tomorrow there's Amazon. And so there's a lot of things that could potentially move the market. And I guess more coming next week anyway. That's it for me. All yours, Dan.
All right, good morning. All right, Wade, we have a few gappers against us, so let's go ahead and take a look at opens first. In the weekly options trader, we only have 3, Apple, and its relative strength with a gap up, and that we have the 235, 230 that expires Friday, looks good. HFC looked fantastic yesterday at the high. We have the 54s, and we're also long stock in the swing letter. In PNC, we have in both letters also. We're long stock, plus we have a put spread for Friday. Weekly, on the swing trader, we have a lot of opens. Let's go through them quick. BBBY, we're long stock, looks great. EVBG, long stock. It's just been dead money here, but if it can get moving, the daily and weekly have room. Fast, we are long in the money calls, and we already sold a third of our position for a 33% gain in 2 days. FL, a core trade, long stock, looks great. That's a retail. Here's another retail, Home Depot. We have a covered call. HFC, I mentioned. IRT, we're in trail mode. We had a beautiful entry right here. And that's just been an easy one to manage. JB Hunt, we sold a put spread yesterday for November. Jable, we have a covered call as a core trade. Looks great. Kim, core trade, looks great. LGIH, another housing stock. We did a way out of the money put spread, the 75s, 75.70s, way down here. NVIDIA, we have as a core trade. It's gapping down here, I'm guessing on the heels of Texan getting whacked. But we have a covered call, and our stop is under the week's low, so we just got to sit through this, and that's where our covered call campaign helps us sit through it. Even if we stop out, we're going to stop out at a gain. Rock, we're long stock, and I tighten the stop to break even. SITC, long stock, as a core trade, and that finally got moving yesterday. We entered over here on this little retest double bottom, and it went up. We had to sit through this, and then finally, and we sat through it because of the bigger time frames. Look great. Below, another core trade, looks great. We'd like into a covered call. William Lyons, long stock, that's another one. It's not a core trade, but it's big percent-wise target. Might get 10 or 20% return. So maybe I should have called it a core trade. It doesn't matter the label though. Core trade to us just means multiple time frames are in alignment for a huge move. And our holding period is weeks to months. That's it on opens. Now let's look at gappers. Teradyne 62.75. That's a beautiful, beautiful gapper. Gapping just over this, so that's going to be a nice one. Six Flags 47.85. That is a bearish gapper. Let's see how much room we have. Kind of that's a mess, but we'll see, maybe 30-minute low. And then penny stock toy, gap into 4.6. I don't trade those. Yeah, remember this beyond? Greg and I were saying target $100. Look at the gap down today, sure. And that's a bearish consolidation. It just sure looks lower. I got to put that in my core multiple time frames. I'm going to do an MT live on multiple time frames on core trades. Beyond, and actually Tilray goes in there too. Today's lesson. Hey, Robert, are you here? Okay, hey, Robert. So Debbie and I decided we're dedicating today's MT Live to you. Profit from relative strength and weakness in any stock and index. All right, Resi. Hey, good morning, Bob Henry. Hey, Mr. Henry, do me a favor and put your drop down to all panelists and attendees. Now look, this was a big old bottoming pattern. So, it had earnings, I'm assuming, and we would never hold over earnings. But this bottoming pattern is getting whacked. Look, gap into all-time lows. Wow, look at this one. I love looking at setups to say, wow, that was a no-brainer. And look at this 1, 2, 3 right there. 1, 2, 3 after lower high, double bottom, closing under, inside weak, all-time lows. That's a no-brainer short right there. But the weekly was in the process of a double bottom also. So, but for earnings, that was an intelligent bottom decision. Boeing here. I love reading the headlines and why we don't care, because the headlines were they were expecting to make, I'm making up round numbers, like 210 a share, and they only made 140, and they're negative 2 billion a month, and not a month, whatever, a quarter. Anyway, my point is they reported horrible results, and look at the stock up $9. So that just tells you it's the reaction to what they thought the news was going to be. So it's not the actual news per se, it's the news compared to market expectations. 41, this is a bullish gap, but it's garbage. Just, if I have no interest in a setup, I just delete it to minimize my focus. And I'm also working on an MT Live called Trading Day Prep and Trading the First Hour. Shop, we were trading it. We had like 3 bull put credit spreads here. And then somebody in the green room was asking me about doing another put spread. I forget which of these 3 days, but I said, no way, Jose. Because that's a breakout failure, wide range. It's a bear 1, 2, 3. So that's going to take some time to rebuild. But look at the monthly. Look at that. That is a climactic sell setup with wide range ending in a bear 1, 2, 3 reversal. That's like a core short. I was just telling you about cores with Beyond and Tilray. I mean, I'm going to add that to the list too. Now, this was the one we got caught in. This was a beautiful, beautiful breakout pattern. We had put spreads under this support, and look, it gapped under our stop. There's nothing you can do to prevent that if you're going to be hold positions overnight. And then, we took our stop, 30-minute low, and look at that. So now it's at 215, and just eyeballing this, let's say we stopped out at whatever, 258. So it's down another 40-something points from our stop out. That's another great example of why we take stops. When the pattern fails, either adjust your position to your bias or get the heck out of Dodge. Hunger, never heard of this little guy. Look, see how my eye just immediately, I just love no-brainers. And this would have been a nice gap trade. Like whatever, 30-minute high, you'd have to go down to an intraday and see where your entry was. But look, this was what we call a professional gap. It changed this in 1 day from a downtrend to an uptrend. Nice bullish wide range close. But I don't know what to do with it now. All right, I got a bunch more earnings to get through here. NSC, hey Debbie. NSC 185. And earnings, nothing to do with it. We'll come back. Lilly 106. That's a bearish. That's a bearish gap. 30-minute low. 30-minute low. Let's keep an eye on shorting that. Oh, I also gave 5-minute high, folks, to lift. You know, yesterday's bar, and it's you know, nice little 15-minute buy setup here. So let me give you that trade I gave to our subscribers. Yep. All right, that's what I gave. Oh, let me check earnings. I didn't do that. Is this the one I checked yesterday? And it's in a week, 10:30. Yep, I remember that number from yesterday. So let me post that. All right, let me continue. QWW, that's a big old mess. You're going. Gulf Delta. That would have been a put spread candidate over yesterday's high. It's a double bottom retest with a potent, but now it's messed up. That can affect our rock. No, our rock is holding like a rock. Yep, look at Apple busting up